This is your LMAX exchange technical update for Thursday, October 26, 2017. Euro dollar. So the euro is still trying to figure out what it's going to be, if it's going to break up and see a bullish continuation in favor of that next major upside extension beyond the recent 2017 high at 2093 that was seen back in September, opening a move towards 125. Or are we going to see a head and shoulders top formation with this right shoulder carving out right now ahead of a breakdown below the neckline and 100-day moving average, which would project a drop down towards 112. So a big inflection point here right now with the euro, and we'll have to wait and see which way we break. A close above 119.10 would undermine prospects for a head and shoulder top, while a close back below 116.60 would suggest that the market is about to see a more significant correction in euro dollar. Sterling dollar. So cable saw a nice bounce in Wednesday trade, but overall this is a market that's been chopping around over the past several sessions. It would take a break back above 133.38, that high that was seen on the 13th of October, to suggest that the market is ready to continue this move that we've seen in 2017 and to continue the uptrend that we're seeing now with a push back towards and above the 2017 high at 136.60. At the same time, inability to take out 133.38 will leave the market chopping around some more and at risk for another pullback, potentially back below 130.27, which is some key support below. A break below 30.27 could expose a drop down towards 127.75. So 30.27 below and 133.38 above are the key levels in cable. Dollar yen. So dollar yen has been trading within a consolidation over the past several months, and the market has most recently pushed up above 114 into the consolidation, into the range high area of this consolidation. So this leaves the market at risk potentially of stalling out up here in favor of a continuation of the range trade, and the market stalling out and rolling over potentially all the way back down towards the range lows. Key levels to watch above and below in dollar yen right now coming at 114.50 above. That's a recent range high going back to July of 2017, and below you want to pay attention to support from the October 16th, which comes in at 111.65. Euro Swiss. Euro Swiss has continued to push higher in 2017, making yet another 2017 high as it pushes beyond the previous high that was in place just several days back on the September 17th at 116.30. The objective here for this market is to push back up towards 120, that major psychological barrier that was broken in January of 2015. Any setbacks here should be very well supported, with only a break back below 112.60, a low seen back in August on the 13th, to compromise the constructive outlook. Aussie dollar. The Australian dollar continues to get hit hard off that plus 2-year high. The market has been trading in this now downtrend, putting in a lower top after confirming the lower top on a breakdown below the 6th of October low at 77.32. And here the breakdown now opens the door for the next downside extension all the way down into the 75 area. Dollar CAD. So a major breakout in dollar CAD, as we had been suggesting for many days now. The market was due for a significant correction that should at a minimum test the August peak at 127.80. That level has now been tested and broken, and the market could be looking for a more significant correction with the move up towards the psychological barrier at 130 possibly in the works over the coming sessions. Any setbacks here should now be very well supported ahead of 125. Kiwi dollar. So the New Zealand dollar is continuing with its decline, now closing in on a retest of that 2017 low going back to May of 2017 at 68.18. Any rallies in this market should be very well capped at 72, with only a break back above that level to compromise the bearish outlook for New Zealand dollar. SPX 500. The S&P 500 has been showing signs of minor pullbacks, but again, this is a market that has been supported at every turn, and so it would take a breakdown in this market and a convincing breakdown in that possibly at this point below 2,500 to really suggest that the market could be topping out. We said that 25.44 was a key level, and although the market has taken that level out, a daily close below that level on Thursday would give some more confirmation. Again, until then, the market could be looking for just another dip to be bought into ahead of a continuation of this record run. So watch to see where the market closes on Thursday relative to 25.44, and then look to see if the market can take out support at 2,500. If that happens, then we could be seeing the formation of a top. Gold. So gold not doing much in recent trade, but overall, as we've highlighted, the market has been well supported, gradually making higher highs over the past several months, and so setbacks right now should be supported ideally ahead of 1250 in favor of the next major upside extension back above the 2017 high at 1357 from September and towards and through the 2016 peak at 1375 further up. Really, ultimately, only a close back below the 1200 area would compromise or negate the constructive outlook for gold.